The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. It's Brian Caprice, or actually, I guess good afternoon, depending on where you're logging in from. This is Brian from Keep Trading Simple, and we're going to go over our current market analysis and identifying potential opportunities on today, Tuesday, November 17th. We got 1 week till Turkey Day. Got to say, I don't know if it's post-Halloween or COVID-19 or what it is, but yeah, this year I'm kind of worried about the Thanksgiving wait, the pies, the turkey, and everything else. But we're one week away from that, and again, let's just jump in because we got a fair amount to talk about today. We had some bad news, we got some new forecasts, we got some lockdowns, we have some comments, we have some oil OPEC meeting notes to talk about. So let's go right into things today. So for those of you that don't know who I am, I'm the president and CEO of Keep Trading Simple, and I've been trading for, God, I don't even want to say it anymore because it's been so long, but approximately, I mean, really 1999-ish, but 20 years. It seems like such a long time. It's like, am I that old that I've been doing this that long? Been looking at charts, again, sort of the traditional way, stocks, options, found, Forex, got into futures, found on binary options a few years ago. I was a financial advisor for one of the big three, so learned a lot about bonds that, people who never hear anything about on the outside world. Realize my passion is teaching, so what I do is I partnered with Nadex to do these presentations every morning. Again, we've been doing some special kind of new broadcasts first thing 9 a.m. Eastern time, but I do these on Tuesdays, and my goal is that every week you guys get one type of golden nugget, or you learn something different, or you look at something differently than you looked at before you got here. So hopefully today will be the same thing. Like I said, you get a golden nugget from it, find something that you didn't know before, or you look at one thing differently, and that's what my goal is. So before we begin, because we do have a lot to cover, let's make sure we go over the risk disclaimer. You would think I had this memorized or I could hit the button to play it, but I don't yet, right? Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And Nadex is a registered trademark of the IG Group. All right, so see, look at that. I've been around longer than Nadex. Anyway, let's dive in. So here's the agenda. We're going to go over the upcoming events. Again, there was a little bit this morning. There's core retail sales, which is definitely important. We'll cover the indices, we'll cover Forex, and then we will cover commodities, all right? Let's dive right in. Let me drag in Forex Factory so you guys are able to see that one. So if you look into the 24-hour Pip Changes, and again, you guys know that I use this scanner. Again, it's just a free tool. It's easy to grab. I use this and I set this to kind of see what type of volatility have we had over the last 24 hours. In the currency realm, not too much. I mean, we've seen the dollar, the pound dollar spike up a bit. Most of this is really kind of dollar based. You're seeing a little bit of dollar movement over here with the dollar CAD, but for the most part, is the pound moving? Little bit of strength here, a little bit of strength versus the yen, but I wouldn't say that this is a major mover for currency traders. Now, there has been a lot of whipsaw back and forth. For those of you that have heard me speak before, my absolute favorite time to trade and when I'm looking for opportunities is 10 a.m., right? 10 a.m. is the best time to trade if anybody asks you. Again, look at how many reversals occur at 10 a.m. Eastern Standard Time. It happens pretty much all the time in all markets. Many examples of it today. But right now you can see that as far as this morning, we've had some OPEC meetings, and this is, I was joking around with Todd. He's the guy, he's the gentleman over at Nadex that actually is the one that hits the button for me, right? We're like buddies now. All the time we talk. But I said there was a joke in here. When you look at the Saudi oil notes right here, if you guys see it right here, right? The highlighting area, the market is too fluid to make a decision in oil. I was like, ba-boom, ba-bam, the symbol hi-hat on that one. That's kind of funny, right? But we had oil this morning. We had Bailey speaking at 6. Core retail sales. Now, I mentioned this yesterday as well as this morning, but yesterday I said this would be a very important number to look at. And here's why. So we always want to see retail sales going up, okay? Retail sales is what I would say is one of the top 5 economic news releases to give you kind of a gauge of the health of your economy, okay? When you see double reds like this, when I say double reds, I don't mean, them changing the previous to worse than it was, but when you see kind of, core and something like this where there's two releases, one is kind of broken down to the other one. When you see negatives like this, and again, it's not negative, it is still positive, but it's red because it's less than the forecast. And then, the initial response is the market has to react to that because it expected them to be better. Now, what does retail sales? I mean, you don't have to be a, economist and things, but understand that the market was wrong, the forecast was wrong. People are buying things, but not in the amounts they thought, okay? Now, how will that change and how is that tradable? It typically obviously has an effect on the dollar, weakens the dollar a little bit. You're seeing that. You're seeing the euro dollar and the pound dollar up, dollar Swiss down, dollar CAD, again, this is an oil thing. Again, this is why this is moving. But again, you're seeing it for the most part. Again, dollar again is down as well. Where we are right now in the economy, we're talking about additional lockdowns. You guys can see it right down here. Again, Investing Cube, I'm not sure they are, but new lockdowns in the EU, okay? Everybody is locking down again, all right? I just heard last night, my wife keeps up with this stuff. She sends it to me all the time. California is locking down. If anybody's from California, I guess they are locking down your religious institutions. Your gyms are getting locked back down again. I think restaurants as well are getting locked down for indoor dining, and they'll be outdoor dining only. And California was not even in the weekend top, the 13 states that were breaking all-time highs in new infection results, right? So California wasn't even one of those. Sadly, I hang my head, Maryland was. Today we are down a little bit, about, 300, 400 from where we were yesterday, but still not in a good position. It's the highest we've ever, we've ever been. So lockdowns are coming. What does that mean for core retail sales? Again, you're going to see those consumer staples get, picked up again. Toilet paper, tissues, hand sanitizer, the things that, we need to keep at home, you will start seeing those. So again, we probably will start to see a spike in core retail sales, and then the exact opposite in the actual retail number. Now, it's going to be interesting because with lockdowns, there's a lot of uncertainty in the market, and we go into Black Friday next week, right? And everybody's about to have their cyber sales. So is there going to be trading opportunities? What is Amazon's bottom line going to look like this year? How much, obviously in-store purchases are going to be absolutely way down this year. Not that that hasn't been the trend over recent years, but, are people going to be spending enough if we're all about to get locked down again? And that's going to be a big question. It could have highly detrimental effects. And again, it all starts in these two core retail sales numbers. And then we had the EC president speaking. And yeah, this is an interesting note. I don't know if you guys can see this right here. I'll click on it real quick. Vaccine, not a game changer for forecasts. Whoops, I don't want to go to Twitter. How do we read this, right? How do you read this? Well, basically the ECB president, in charge of all the economic kind of financial decisions in the EU, what's happening over there, is saying that right now the vaccine is not going to be a game changer. That's pretty scary when a world leader that has that much control is saying, hey, it's not going to really change our forecast right now. It doesn't change the trajectory, right? I mean, it's 2 to 3 months. Then it's like, how do we get it to the people we need to get it to? Is it going to change? I mean, there's a lot there, but that's a pretty big statement by someone as powerful as that. I mean, imagine if, I don't know, take, probably the top 3 people that affect the U.S. markets. Imagine if President Trump said it, or, President-elect Biden said that, or Colin Powell, or Powell, not Colin Powell, the other one. If Powell said it, or what if like Warren Buffett said, all my research into the vaccine says it's not going to be a game changer. Imagine if Warren Buffett made a comment like that. Like this is kind of big news, and it kind of gets put to the side because it's the ECB. But again, what does that mean? I keep hitting the button. What does that mean, overall for, again, for the markets? Oops, not that one. I guess I can bring this one down and go back to here. So just things we need to watch out for. Now, this week, today's a lot of speeches, and this is really, this week in general is a lot of speeches. There's not a lot of economic news events. CPI is going to be a big one again. CPI, if you guys don't know, is kind of a front runner for inflation. It's gold, and it's not like gold and silver have been, kind of the rocket ship that many people thought they were going to be. And then we go into, Aussie unemployment data tomorrow night, right? Employment data is saying that it's down 26. They're losing jobs. Their unemployment rate is going up. It's like, wait, Australia was one of the first people through. What the heck is going on here? Right? This would be 2 times that their unemployment rate is going higher. And then that's tomorrow. And again, remember, we have crude oil tomorrow morning at 10:30. Crude oil, again, very interesting. The cuts, again, that's why we're seeing CAD down a little bit. And then we go into Thursday, and the ADP non-farm number for Canada also showing, again, previously there's not a forecast yet, but they're losing jobs as well, right? Our unemployment claims supposed to be about where they were, but is this going to start spiking? I don't know. Lockdown, closing of restaurants. Again, those are not good news releases when we're starting to talk about unemployment claims. Question is, for anybody that fought unemployment earlier in this year, there was, it's limited. You don't have it forever, right? Is this number going to be a true number now with unemployment and people kind of using up all their unemployment? What's going to happen then, right? Well, that could be the big stimulus word, right? If we see stimulus, then again, expect the CPI number to start going up, gold going up, and all those things associated with it. Friday, we have the retail sales number in the UK. Now, the UK has been so absorbed with Brexit. As you guys know, I'm like, oh, Brexit is coming, and we're almost at the hard exit. There's been comments in the last week about how, businesses will be okay for a hard exit. There's still quite a difference of opinions on how this could be. Negotiations are not as far along as we thought. We were told that it was going to be October. Then we were told early November. We're now officially into the middle of November, and that deadline is coming really, really fast to where it's just a hard exit. Now, I will say at this point, if there's a hard exit for Brexit, is it the end of the world? Will the pound literally go down to zero? The answer is no, right? I mean, at this point, I think every business in the UK has had to prepare for it. Will it affect the U.S. economy? Probably not. I mean, so if you're a U.S. index trader, this is not a big deal, but under normal circumstances, retail sales in the UK would be a big deal. And they're showing that people are starting to spend less money, and we're seeing lockdowns in the UK as well. So for those of you that are currency traders, Friday morning could be a big day at the UK Open. Okay, getting these retail sales numbers, it could be a very large mover. And again, if you guys are unfamiliar with it, jump over to demo if you're up, or even at night, start to look for trends. Look to see for those high and low zones. There'll be some over the night kind of trade setups on that one on Friday morning. And then we go into CAD retail sales, and again, we start our G20 meetings on Saturday. So, I wouldn't say that this is a action-packed week as far as news goes, but there's some pretty big ones in here. And like I said, now that the election is kind of past us, it's kind of like, what is COVID going to do? Again, Thanksgiving obviously coming in the U.S. And again, what comes out of these G20 meetings is kind of the next big thing. And then obviously, Brexit is still hanging out there. So, yeah, there's some opportunity out there, right? There's some opportunity. Like I said, I think the big things that people need to be focused on at this point is watching kind of streams like this, looking for big bits of news, right? The hottest news. And again, obviously some of these little tiny things in here, don't necessarily matter as much. But things like, EU locking down, here's one right here, the Bank of London, potential long-term economic effects of COVID, right? Do you think a couple of these are probably important to read? Yeah, probably. Probably not a bad idea to kind of, educate yourself as far as, what could happen. All right, so let's go over to charts. Let's dive right in and let's go over to the indices. Now, NQ. All right, so I mentioned, if you guys listened to the broadcast yesterday morning at 9, I mentioned that there's an interesting relationship between the NQ, right, ES, and the YM, right, NASDAQ, S&P, and the Dow. So obviously, lockdown tends to be good for the NASDAQ. Why? Because it's very technology-based. We saw it spike up. It was very reactive. Why? Because, again, things like Zoom and anything technology-based or virtual this or telecommuting all tend to be good for the NQ, right? Obviously, we've had a lot of movement. Again, lockdowns are going to go there. I mean, colleges are starting to go fully virtual again. Again, you'll start to see year-end forecasts. And again, if the forecasts continue to kind of push recovery farther and farther down the line into 2021, these are all good signs for the NQ. Now, on an intraday basis, we've been kind of stuck around a level, right? This is an hourly chart. You can see we had, and I drew this for them, everybody earlier, right? We kind of had some basing. And again, I don't want to turn the screen. I want people thinking that we're buying from this level. But we had an area where we really had some channeling, right? We kind of retraced back up again, and we're bouncing back. And we finally broke out and ran into a small level, and we dropped back down again, and we made another attempt, and we're still kind of stuck there, right? This is kind of a market that you look at and say there's a lot of indecision. Now, is there small intraday plays in this one? Sure. I mean, there's been some smaller things in here. I'll delete this so you guys can take this out, right? There's been some small plays. We had a little zone here again. Nice pop, little gap. Perfect, right? It turned around where it was supposed to turn around based off prior selling, and again, came back down and kind of came up and gapped right past, and we're kind of there again. I would say the NQ right now, the best way to play this one is to look at this one early in the morning. drop to your lower time frame, something like a 15-minute. And again, here on a 15-minute chart, you're seeing it looks like there is a lot of movement out there. And today, again, there was some great movement, right? We saw a big collapse. Here's a 10 o'clock reversal, right? It kind of missed an area, and again, that's where buyers have stepped in. It kind of missed it by a little bit, but you can see, again, the very small time frames, right? Those have been kind of where the bounces are occurring, right? Overnight, nothing. All of a sudden, 9:30, we have the open, boom, straight down, 10 o'clock reversal, right back up again, and we're more or less in the same spot that we were. But a lot of movement very, very fast. And this is kind of how I would say watch this for the rest of the week. As far as what we can do later on today, or, again, I would say we are probably a little bit higher in the curve. We have some sellers, and again, this is not crystal ball forecasting here. This is, again, sellers have stepped in here. They stepped in here. They tried to get past on great news and got forced down again, and then were unable to rally higher. So it's showing us that there are sellers in this area. I'd have to say that I'm probably a bit more bearish biased. Ways to play this, again, you can get some knockout brackets in here. And again, Todd brought up a great point earlier, and it's one of those things that I take for granted. Remember, at Nadex, you do not have to hold things like knockouts till the actual knockout. You could get out of them early if you like. Same thing with binary, same things with call spreads. So again, that's been an interesting way to play this one back and forth. Play them, get out, and then again, you can get in later on if you'd like as well. All right, so NQ for me, I'm a bit more bearish-minded for us this week, and again, trade this on the smaller time frames. Now, S&P had a great setup this morning. We were negative, and again, we were looking for a red open. We got a red open, and again, here's an example of those 15-minute time frames. Well, here's a gap. All of you know that I absolutely love gaps. I have an entire strategy that I have from Sunday nights. Here's a gap. You got to watch that out. Got to watch gaps. And we talked about this as 3586 level. Well, what did we do? We got a red open. What happened? At 10 o'clock, it ran into a gap. And what happened? The result was a boom spike higher. Okay. Now, this is one of the things that's a little bit more difficult when you're forecasting, when you're doing your, you do your due diligence, you're putting things together and you're trying to craft and craft analysis for people. It moved faster than we thought, but again, what did it do? It met our goal, right? This is where we're telling people to get out of trades, and again, what did it do? It hit, it bounced, and then look at the rally off of that level, right? Again, 10 o'clock reversal. Let's trap everybody at the open. We trapped them into shorts. It came into a prior area. Again, not using crystal balls, using what we've seen in the past. Boom, explosion higher, okay? So S&P where we are, kind of the same thing. I mean, there's a small level right here. I mean, I can do it on the hourly. You can see there's a little hourly zone right there. I don't know if you guys can see this or not. Again, it's the red on the gray. There's an hourly level here. I'll make it a little bit bigger so you guys can see it. You guys see the dotted lines in there? So it's saying that we're sitting in an hourly zone right now. Could we have a reversal from here? We could. You don't get as many reversals. They tend not to be as strong at 1 o'clock in the afternoon as of 10 o'clock in the morning. But it is a viable level. We get some basing in here. This could be a rollover point to kind of end the day kind of back where we started, right? We can go a little bit higher. There's another level here. But I would say overall, I mean, look in the S&P, we're not at the extreme ranges. We are in the upper area. I mean, again, if you're looking over here, this is the upper, this is the upper third. So we are thinking bearish positions. So, kind of the same thinking. How do you play it? You could probably, you could take something if you'd like here. But at this point, I'd wait and kind of see what happens, right? If we base or we end up and start putting new levels in, this would be something I'd be willing to take short tomorrow morning, okay? And again, you can see most of the movement. I mean, all this down and all this up was the open until noon. That's a lot of movement, right? That's a lot of movement in a very short period of time. And again, the way that you play these things is you drop over into the 2-hour, the 2-hour binaries, or even knockouts in this case, right? This was actually an interesting, little knockout play. So that's where I'm looking for S&P. Dow, same thing. Here's a level that we talked about this morning. We talked about there being a Harry Potter trade, right? A continuation to the downside. We had a breakdown. We had a punch lower. It kind of came across, pulled back up, grabbed that zone, punched down, and again went past our 1 to 3. So this is the ideal example, right? This is the ideal example of why you don't necessarily have to hold everything till expiration or a knockout, right? This was a level you're looking for. There was a knockout down here. The lower kind of floor was at 29,200. Had you been holding it, waited for a knockout down here, guess what happened? It retraced on you, okay? But again, here was our 3-to-1 risk to reward ratio. Actually, it got to about 4-to-1, right? Looking to grab 4, risking 1. And what did it do? At 10 o'clock in the morning, it hit the exact area where the gap occurred, just like the S&P, and that was a springboard higher. Okay, so this is where, again, being active, looking for your profit targets, and again, having the chart dictate where your profits are, not where when a binary, is expiring, works out really, really well. And I would say the same thing. This one, the analysis is exactly the same for me. Again, we're pushing higher. We're in the top 30, top 30%. You can see not at the, far extremes, but again, decent level of basing here, a little bit of a gap here, and again, a level here where it forced itself higher. But again, these descending wicks here lead me to believe if we're anywhere up in here tomorrow, again, it could be an interesting down day. And if you listen to the news, what would turn this thing negative? More lockdowns, more lockdowns, more lockdowns. Okay. And again, that's kind of this negative data over here, rolling over. And again, you get overly negative, what happens? The market goes up, right? So again, it's a play back and forth. I'd be looking for shorts any higher. Now, the currency market is not as active right now. There's a level that we mentioned here. Again, the 73.33. We've talked about it multiple times. Many weeks now, we have mentioned this one. Again, we ended up hitting that area again, and it's moved about 50 pips in the last 8 hours. You can see here on an hourly basis what it looks like. Again, we tagged that level, this line again, the extreme range of the curve, right? Pushed down and ran into a level of buyers. At this point, I wouldn't say there's probably much movement left in this one. But on a grander scheme for the rest of the week, I would say that I'm probably bearish to this position as well. Not that I think that the dollar is the strongest of currencies right now. I mean, they're obviously not raising interest rates anytime soon. Mention of stimulus and printing more money is also very negative for the dollar. But we're seeing data out of Australia, and the numbers and the forecasts that we have seen have all been negative. That's not a great sign. Seeing CPI data also predicted to be basically flat or negative, also not great for gold, right? Which again also drives the Aussie dollar back to the downside. So being high up here, being in an area where we've seen sellers step in multiple times at this point, and again, we just hit it again, I am also thinking bearish for the rest of this week. And the way to play this one, again, looking for news releases. Again, Governor Lowe is speaking today at 5 p.m. Eastern Standard Time. He starts talking about locking it down and having a negative situation. Again, another opportunity for this to come back down to the 72.27. That's kind of my target for later in the week as well. Okay. Now, Aussie yen is another one. This one is a little bit in the middle. You can see we weren't quite as high on a 4-hour basis. It had already retraced back once, and it's kind of hitting zones here. So let me move this over just so it's a little bit easier for you to see. Pull this over. There we go. But here's where my curve is. Again, every time we've gotten up top, again, it's kind of pushed back down. Here. We're in kind of no man's land right now. I'm still waiting for price to drop back down to 75.46. I'm sorry, 75.47. A little area here, and again, I don't know that this one will actually have the ability to hold. But again, it's not something I want to get long in the lower reaches here. I'm really waiting for this to come back down, and probably ideal for me on this one. Probably looking at like 75.08-ish area there to be able to take this long. Let me get into the pen on what day. We're early in the week. If low is pretty negative with the Aussie and what Aussie's economic situation is, if we have a drop down tomorrow night, this could be an interesting setup here. Tomorrow night, come on, you can do it. The problem with different size monitors. Where are we at here? Tomorrow night at 7:30 p.m. Eastern Standard Time, you can see that we have some negativity here, right? They're expecting the unemployment rate to go up to 7.1. That's a big jump. They're expecting this to be, quite a change, right? Well, if we can kind of get driven down into this level at 75.08, the last time price was here, not only did we have a gap, we had to push away and a pullback and then bounce off of that level. So this is one of those ones that I would keep on my radar. And again, if you're unfamiliar with it, again, just trade it off a technical basis. Look, in this case, if we get a bounce lower, there may be some knockouts down there, maybe some call spreads. And again, depending on where we are when the news comes out, there may be even some opportunities from some binaries. Again, taking it low in the curve back into this middle region. Now, Euro Yen looks pretty similar. We've had a Harry Potter setup on this one. We talked about this being kind of our intraday range, so I can kind of delete that one off and use the larger scale here. Let's move it over just a bit so we can kind of clear it. There we go. And we had a Harry Potter setup. I guess we did it off the 30. Did we do it off the 30? No, it was an hourly setup on that one. You can see this was a prior level, and actually we probably should adjust it just a little bit right there. It kind of got skewed just a bit. Oops, right there. Okay. And again, coming in with a break of 123.64. Now, this one is also kind of a retracement of this large emotional spike coming back down. The 1 to 3, I think, in this one, risking 1 to make 3. I think it's decent. It's putting us right here before the big move. The 1 to 5, unfortunately, is a little bit deep. I do feel like buyers will step back in just before that, so I'd be a bit cautious with that. But ways you can play this one, depending on where the knockouts are, I don't actually have it up in front of me, but there's knockouts, there's call spreads. If we can float around this level for the European Open tomorrow morning, this would be also another one of those. And again, European session, right? If I marked off these, I thought I had done it for you, but I guess I didn't. Again, European session opens here, and 8 o'clock is there, right? That would be a blue. Let me change this back to blue. Hold on. There we go. And then same thing. This is a European session move from here. Whoops. From here up to 8 right there. So you can see where the European session moves typically are. Same thing. European session move here down to 8 there. And again, not the full move, but you can see what triggered it. And then vice versa. Right here is 3 down to 8 is there. So if we are floating here, I mean, again, I could take any of these boxes. I'll just take this one. You can see that if we are floating in that level, it puts us back into that profit range, dropping us back down again. So kind of something I'm looking for tomorrow morning. Again, if we are floating around this level at 123.64, again, with negative news, that could definitely come out of the euro. Again, they're talking about lockdowns, vaccines aren't helping. That could definitely drive it and retrace back to the election move. Okay. Now, pound yen again, we got the same level. This one is really just consolidating in. If I was going to draw some lines on this one, I'd be like, yeah, we're consolidating here. And whoops, not that one. And we're kind of doing the same thing, consolidating in. Again, the pound is waiting for Brexit. There's no ifs, ands, or buts about it. It's waiting for yay or nay. It's either happening, it's not happening. So there's really not a whole lot we can do with this one right now. Right now, I mean, this one has a daily ATR of 137 pips. Okay, it's moved 17 pips in 24 hours. Okay, so it's just not providing a lot of opportunity right now. It's chopping back and forth, and it's kind of stuck. With no news in the pound, there's probably better places to put our money at this point. Again, have an alert set. Doesn't cost you any money to put an alert in, but a break of 137.03. Again, I'm looking for a retracement back down to the 136.18 level. Kind of have same thing we had with the euro yen. Looking at the pound dollar. Okay, pound dollar just actually dinged off an area this morning. This one also. Right, this one dinged at about 3 o'clock. Now this one got close. Right here is the, let's see, right here is the 3 o'clock candle. So you can see that again, we rallied up, and what happened? Kind of tagged this around 6, 7 o'clock this morning when U.S. traders kind of came in, and it's slowly retracing back down again. So I would say, as far as catching this bounce high, probably not. Catching this on the downside, yeah, I mean, it ran into a 4-hour level, right? We were hitting a 4-hour level. We're sitting high in the curve. So we did expect this. It hasn't been a ton of movement to the downside. I mean, literally from the peak to now, it's only about 25 pips. I do agree with it. I do think it is going to roll. I do think it will come back down again. Kind of the same scenario. Is it the best place right now? Not really. I don't know. It's just moving very, very slow. And like I said, with a lack of really pound news until Friday, there's just not a whole lot in here. I mean, unless they magically say, hey, Brexit is in. I think the longer that we go here with no deal, I think I think the pound will continue to push lower. I think the market right now is under the belief that Brexit will happen. The closer and closer we get, I think the more negativity that will surround it, and I think it will come back down. And again, maybe even potentially push us back down here into the 129.50ish range. Okay. Now, Euro pound kind of stale as well. Same thing. Got a Harry Potter setup on this one. Looking for a continuation, lower, right? Break of 89, really 89.50, right? We're basing in the level now, so it's kind of meeting what we want. There will be a little bit of a hiccup, but that may give us the hiccup that kind of brings us down into here, right? This little kind of piece right here. That may be the push, and then again, what are we looking to do? We're looking for a pullback, and then we're looking for a collapse. Okay, and again, first target is good. Second target, a little bit deep in here. I'd be a little cautious with that one. Not a huge level. You're only talking about 25 pips to the downside. So again, ways to play this one. Probably a call spread, again, depending on when we come through. If we're just going sideways tomorrow in this one, again, European Open, this would be maybe a daily call spread to the downside. Would be where I look at this one. Again, we're not talking about massive amounts of movement. So maybe even just a little bit out of the money binary or something. Like I said, it's the same thinking. By pushing down, that would be European weakness, the same thing we saw in the euro yen. So kind of giving us two charts that believe in the same type of setup. Now, euro dollar, this is one of those ones I've been looking at. I'm like, it's close. I mean, we got something higher, right? Go up here, pull this across. This one, the analysis really hasn't changed. Again, we're grinding back up, but we've been in this kind of middle area. Let's move this over. Kind of in this middle area, right? We're kind of chopping back and forth, and it hit some levels here and then kind of put a little bit up. We're close. I think 119.17 is kind of the, I don't know, probably the best opportunity. And you can see here, we kind of hit this, and I just don't like the way that candle formed. I don't like that it's a huge candle and half of it is a wick up top. It's always nice when you have tools like this. Like, this is an indicator that I have for my students. It's always nice when they hit it and you're like, yep, there you go, would have traded that. But in all honesty, 100% transparency, I didn't trade this one. I just don't like the way the formation is there. So it's nice that it happened. You know, it's always great, but I'm waiting for it to get a bit higher for me on this one. And again, that would be, you know, again, high in the curve, looking to push back into this middle range. I think an intraday level, you know, intraday curve right now is between, you know, I mean, this is kind of the intraday level, right? Again, waiting for some big news back and forth again. But I'd be willing to take longs on, you know, longs down here at 117.42. We got a ways to go, and then shorts up here at 119.17. I mean, if it rolls and stays flat, oh well, no harm, no foul. You didn't take the trade. It left without us. It's going to happen. It's going to happen. It's called trading. Okay. Now, dollar CAD. So dollar CAD had some movement. This is a trade that we had talked about. I don't know if I talked about it yesterday with you guys. I don't remember I don't think I mentioned this because we only got about 10 minutes in the morning to cover it. I know with my students I talked about it, and it's something that everyone that's listening right now, you guys should know. In the style of trading that I do, I'm a supply and demand trader. I'm looking for explosive movements, right? Explosive movements. This is an explosive movement. A pullback to a level of basing. Again, there was a gap sitting right here, and I know I drew this the other day. That's the level right here, right? Because there was a gap down, shows an imbalance, and then boom, right? Well, you can see boom, 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 boom. We hit it this morning again, launched it higher, and then it ended up coming up and grabbing an hourly level. So it's been decent. I would say on this one, with all the negative oil news talking about extending the cuts, obviously all those things are weak for the Canadian dollar. Tomorrow we obviously had that CPI number for the Canadian, you know, for the loonie. So it's kind of setting up, I would say, for a bit of a retracement to push back down. I don't really have a clean kind of entry place to short here, but I could definitely kind of see this rolling over into tomorrow morning. And now again, do we take another long from here? Maybe. I mean, if we can kind of in the overnight retrace back down, this level is sitting at approximately 130.68. If we can get down to that level before the CPI news, that could give us the spike that we were looking for. Okay. Actually, while I'm talking right now, let me actually pull Nadex. The dollar CAD is one that I don't reach over to Nadex as often. I tend to find that I just can't get the thing. I just can't get the you know, the levels to line up for me. But let me just check it real quick. Let's see, 130.68. There's actually a. I'm not gonna tell you the number. I want you guys to go into the platform. You know, if you don't have a demo there, go get one. There's actually a knockout in this one that is not horrible. I actually do like it. It's one that I probably will look at on my own account. Again, if we can get down there before the Canadian news tomorrow, that may give us a, again, limited risk entry with knockouts. Because remember, you can only lose what it costs you to get in, including fees. That could be an interesting little bounce level in a knockout. And again, I don't find too many knockouts with dollar CAD, but there actually is one. So go check out those. I'm not going to tell you what it is. You got to do your own homework. But I do like bounces off this lower level, particularly with news. Now, dollar Swiss. Dollar Swiss is kind of lost. Again, it's one of those ones that it's great when it does this. You're like, yes. And then it kind of gets stuck. Okay. We're kind of stuck right now, and there's a couple levels over here. We've talked about these different levels. We mentioned that there was a little bit of a zone here that we could have taken longs off of, and it hit and popped and hit and then based and kind of went lower and higher and kind of lower and then higher again. But we're kind of stuck, and we're right at the top of that kind of no man's land. And this is what happens with this pair. We're going to need something kind of monumental to kind of get us out of this area. And when I say monumental, it could be something major. I don't know. I mean, like on the level that maybe that there's a, and not that I see this happening, but I'm just trying to give you guys a this quality of a kind of piece, right? If all of a sudden they mandated masks for all outdoor, everybody that's outdoors mandated have to wear a mask, that would be something that would change this around. I would be like, what the heck's going on? Really? Again, that would cause some discontent and a kind of movement all over. That's kind of what this one is going to take. I just don't see much in here. Again, do I like this in here? Yeah, I like this. I think it can retrace back down again. I do see more dollar weakness coming in. Again, they mentioned stimulus, which the way that it's looking, they're going to mention. It's not a matter of if, it's a matter of when they're going to mention stimulus. I do think this one longer term is going to be one that drives back down into this, kind of this 89, right there, into the 90. And again, a lot of zeros. It will act like a magnet, pull it back down. And in reality, it's only 88 pips. It's not really as far away as it seems. So it could actually happen pretty quickly. Now, dollar yen was a position that we talked about this morning. Now, dollar yen, it's a little bit disappointing. I mean, you'd love to see this. This is the Harry Potter we had set up from this morning. We were looking at a break of 104.12. Now, this is one of those ones I had set up and it moved very, very fast. It came all the way down to basically 104.04, got really, really close, and then pulled back up. It's kind of stuck. It's doing the same thing. Like, it's literally stuck in that same level. Here it is. It dropped and kind of dropped, and again, went off this little 15-minute zone. So as far as kind of, and again, this is, look at this. You can see this. Look how little this movement is over the last, I don't know, what is this, 2 hours, 3 hours? Literally a little bouncing back and forth, and then boom, we ran out of steam. We ran out of all catalyst. Even on a 30-minute, you can see, I mean, it has flatlined for 2 hours. And that's kind of the problem with this pair sometimes. So remember, it's always nice. Make sure you guys have, again, these things set up. And again, you have to be willing to accept this risk. This is one of the problems. And again, had you taken any type of binary position on this one, it's in the same spot. You got no movement. Again, that's why we always talk about you have to have acceptable risk before getting in. So, it's one of those things. In currencies, it may continue to drop. It really hasn't given us the true entry. We love to see basing and then a pullback. Hasn't really given it to us yet. And again, on a 15-minute, you guys can see, you guys know the Harry Potter rules are what? It needs to come down, right? It needs to come down. It needs to base so we can, draw a triangle and then come back up again, right? We're looking at this. Unfortunately, this didn't do it. What did it do? It gave us this. Oops, move this side, you can see it. It gave us this, and then it gave us this, okay? This does not equal this, okay? So again, that is why we have a rule-based system, okay? It's close. It's there. You want to jump the gun a lot of times, but it didn't meet the full requirements of getting in. So I would say right now, I mean, it's still valid. I mean, I definitely see this, overtaking it, coming back down in the 35-50-ish range, 60-ish range. Is it going to do it today? I don't know at this point. I mean, it's 12:30 in the afternoon. There's no economic news releases. It's going to be a pretty slow grind at this point. And again, we're still stuck in this bottom kind of reaches of no man's land. So, unfortunately, the dollar yen is one of those pairs that it doesn't have as much movement as, say, the euro dollar or something else. But it's there. And again, it can be frustrating. It's like watching paint dry some days. Again, that's what happens. That's what we got. So let's look over at gold. So gold is also in an interesting situation. So here's, again, that parabolic move to the downside, ran into a 30-minute level that, again, was tested right here. Again, not a crystal ball. It's using what we've seen on the chart, using our eyes to trade. Again, we had sellers or buyers step in right here, right? They stepped in right here, and what happened? Large emotional move, parabolic retracement back right up to the origin of the move, ended up tagging, level came down, and now gold is going sideways. So, gold is one of those things that people are like, well, wait a second, why isn't gold at like 2,000 yet? Isn't it supposed to go to 2,000? Gold's waiting for the S word. The UK is waiting for Brexit. Gold is waiting for the stimulus word. Now, when stimulus comes, it will definitely pop, okay? You printing more money, again, leads people to believe that there's going to be inflation, punching things higher. Seeing an economy that's collapsing, that's in need of stimulus, until the official stimulus is there is no inflation, okay? People not working does not create inflation. It's just not there. So, what can we do with it now? Again, kind of the same thing. I mean, I don't know when they're going to announce those words. It may not actually come until January. And if so, it'd be kind of the same thing. Looking for a Harry Potter trade to the downside. Okay, there could be some interesting shorts. Is this is this the ideal setup? Not really. Again, it's going against what direction we think gold will eventually go. But again, with lack of any type of news, gold could definitely be pushed in the downside. Even on a 15-minute level, you can see there really wasn't a lot of opportunity, right? It's been an area where buyers have stepped in, not really great levels up top either. And, you can see that we were pushing higher here, right? High, lower high here, and then all of a sudden, boom, we dropped a whole nother level and we can't even get back to it. So gold's not super exciting. I have a couple alerts I'll set on this one. I don't, in all honesty, I don't trade tons and tons of gold. I love that people are like, I trade everything all day long. No, gold is something I do a lot of analysis on. I don't trade a tons. I do have alerts set for this one though. I do like how fast this one rallied back up again, and I do think with any lack of, again, true stimulus, I do think this one will kind of roll back over and come a little bit lower. Like I said, when you see demand down across the board and energy prices, they're saying, hey, listen, we need to keep the cuts low longer because demand is low. Again, low energy prices doesn't do a whole lot for gold, and that tends to bring this one back down again. So, there's a couple different ways to play this one, but I do think this one will push lower. Silver is kind of in the same idea. Silver, again, I'll move these to the side. You can see silver is even less exciting. These are 30 minutes, right? So here's where we are now. We were at the exact same spot. Here is where we were yesterday. So silver, is it trading? No, it's literally going sideways. So yeah. On the hourly, this box, by the way, is like, listen, we're channeling, and now we're doing the same channeling again. There's just no movement. With no movement, there's just not a lot to trade here. So if we can pop up to 24.97, I could be persuaded to go short. If we can get back into, and I'll move this way, back into the 23.80, again, I could be persuaded to potentially take a long. But right now, we're literally cutting down the middle, in the middle of the curve in no man's land. Just not a lot there. I'm just not really excited about that one. So going across to oil. So this is what we have for oil. As you guys heard me, again, if you attended earlier, Monday morning we talked about getting short from here, and again, it dropped all the way back down right to our profit target at 41. Now we're kind of floating around between, 40, 50, and kind of this 41 area. We're still kind of channeling lower, and I mentioned earlier, I guess Todd was on, was he on a 15? I don't know. I forget which one he was on. Oh, I broke it. Reset. I think I broke TradingView. Oh, there we go. He may have been actually onto a 15-minute chart. Let me see. May have been down here. Yeah, we talked about it earlier. Coming back up into the kind of the 41.50, we mentioned we had some levels. Again, this is, this was the trade from yesterday, so let's go ahead and just clear that off. Oops, not this one. So looking for levels where we've seen sellers step in. Again, here's a large explosive bit of movement, right? So this is kind of, again, small intraday play. Sure, there was something small in there. But for the most part, again, highs are coming lower. We kind of stabilize ourselves. What I mentioned for the morning group was if price could come down into this level down here at around 40.25, right? If we can drive that low, I think this is a decent area to go long. Will we get down there before tomorrow's oil inventory report? I don't know. Again, I don't know what the numbers look like ahead of time. But I will say this is an area where we've hit a few different times. Let me bring it back up to a 30. You can see that, again, we had a pullback here and a punch higher. Here, punch higher. Here, we based in it, boom, punched higher. So it has hit it a few times for you Fib junkies out there. It is an 87.6. I'm sorry, a 78.6 that literally goes right through the middle of it. So I think it's probably a decent level to take a pop off of. I mean, one potential scenario for this one would be, something along these lines here. And again, making sure you get at least a 3-to-1, which would pop us, again, right back up into the 40-80 range. So we have to see what it looks like coming down. But, one potential area. If we float here, again, what we may see from now till then, again, we're trending down. For the people that love to draw trend lines, if you're drawing a trend line here, again, what is that telling you? 1 touch, 2 touches, 3 touches. Again, it tells us it's going to hit and it should roll back down. So it's kind of setting up that way. I wouldn't be surprised, though, if we just kind of go through here sideways. But with just everything we've heard about the UK, the European Union locking down, with California now locking down, with OPEC saying that, hey, listen, we need to keep, continue to keep these cuts longer because demand is getting lower. Seeing, numbers spiking. I don't know how many today. Again, none of these things are really great on a fundamental level with oil. Obviously, the guys that turn the switches in Texas, they can kind of tweak the oil inventory a little bit. But just as far as global demand goes, I mean, obviously, yeah, none of it looks great. So, like I said, coming into a zone down here definitely could lead me to believe that, yeah, demand is not great for oil. Let me see if I have the inventory reports for tomorrow yet. I want to see if not the actual report. All right, so they're saying right now, this is what we're dealing with yesterday or last week, right? Last week they expected it to be negative, and it came in big. It came in at 4.3 million barrels. Right now they're actually predicting a surplus this week. So I think they're trying to cover their butts and be like, hey, we had a ton and then we used it a lot. I honestly wouldn't be surprised if this is a miss and we come in at like 2-3 or maybe even like 3-1, 3-2. If we come in high again. I think a lot of people started getting locked down early, and again, it depends on how much the guys in Texas are twisting knobs at this point. But wouldn't be surprised if this pushes lower. Because like I said, if OPEC is saying that we want to continue with the production cuts, they're seeing it as well, that demand is just not there. And I don't know, I just feel like it continues to cause some problems. So that's kind of what we're looking for. And again, on a technical level, let me bring it up one more time. You're kind of seeing that, again, this is a level that we've run into some sellers. Now, in the overnight, if we have an absolute crash in this thing down into the 30-55 range, this is also a strong area that's been untested. Again, I guess it was tested right here. It's confirmed right here. This is another area that's kind of a highlight for me. I'm kind of looking for it, saying, hey, listen, I think we get a big bounce off that 39.50. Is there going to be enough news to drop this, $1.50 in the next 24 hours without, I don't know, something massive happening? I don't know. I mean, for that move to happen, we need something from like Boeing, right? If Boeing says, hey, listen, we're going to further reduce or we're going to lower our things because, travel needs to be canceled, I don't know. Something along those lines could definitely drive it down. But, I'm not, besides that, barring any crazy news, I think, well, this is a decent bounce level. And same thing, if we kind of pop up, we could pop back up into this range. And I could do fibs in the opposite direction, look for a retracement. Like a place to get short would be pulling it from here down to here. Be looking like a 50%. You guys can see right here, the 50% retracement comes right through this level right here, right? I don't know if you guys can see it. I'll move this a little bit farther across, right? From here to here, the 50% is right here. Okay, it's sitting right in this loan, right here. Okay, so kind of another level for those of you guys that love fibs. This could be another level for us to kind of turn and roll again. Going with the trend line, going with the 50% retracement, going with supply and demand. A lot of things in there would, again, lead us to believe that it's going to turn and roll. All right. So that's pretty much it for today. I mean, like I said, we went pretty quick. We covered a lot of this morning. Again, with the indices, best way to play these, again, you got to look early morning. Look for whatever happens at the open. Look for what the current trend is. Drop it down to a 15-minute or a 30. Look for those little levels. Look for a 10 o'clock reversal. Has been how to play that. Forex, a lot of people are waiting for some news. And again, commodities, we're just not seeing the inflation. Again, gold more bearish. Silver, so somebody check a pulse on silver. That one's more or less flat. And then oil, you guys just saw it. So we will be on next week, just for you guys that are going to be around. For Tuesday, I know a lot of people travel, but we are going to do a presentation next week. For those of you as well that didn't know or maybe are unaware, every morning, 9 a.m., go to YouTube, search Instagram, and we're going over kind of the best 1 or 2 setups that we can find for the day, and talking about different ways you could potentially look at them. All right? So if you have any questions, this is how you get in touch with me. I know it's a lot of stuff. Again, in the mornings, it's not on my YouTube. It is on Nadex's. But again, if you need anything, best way to get in touch with me is support@keeptradingsimple.com. And that's all I got. I'll see you guys next week. Good trading. And again, don't forget that the Nadex contest is live. I know some of you out there are trading it. And if you're not, get over there and demo and play some of those trades. So I'll catch you guys later.